Hello, dear business owner. This video is a practical guide on how exactly legally start paying zero tax. And in addition to the practical part, I will share with you the basic simplified version of the history and the foundation of this concept of you actually paying taxes, because I want you to be smarter. I want you to own the knowledge and understand how the economy and the global economy and the financial parts of this global economy works, so that you will become better business owner and a smarter person who is in control of your life and of your finances. Here's just a quick overview of the basics of taxation logic, right? And the taxes existed before Roman Empire, but the Roman Empire implemented the foundations for the tax collection and tax tracking. And that's why I will give the Roman Empire example that actually leads to the nation states today as well. So, and one important aspect about the tax to understand, it's never about equality or providing people services. It's always about moving the wealth from the poor or people without power to the people with power. So it's always about power. And let's talk about the ancient Rome example, where we have a senator, and guess how he is actually getting funds for his land and his lifestyle. Well, he gets it from peasants, because when a peasant actually works on his land, well, that's the difference from the peasants now and the peasants in the Roman time, ancient Roman time. At least they had a land, but anyway, so the peasants paying tax, and when the peasants are paying tax, so they might get a little bit of protection and maybe even a visit of a doctor, but mostly protection. But protection from whom? Guess what happens when you don't pay tax as a peasant? You have a tax collector who comes to you and forces you to pay tax with whatever you have, to be honest. So you know what's the main moral of the story is, well, don't be a peasant, right? That's first. The second is that powerful people will always find a way to not to pay tax, because the tax are actually for the poor and the people without power. And I'm not telling you, okay, what's good or bad. And I'm not asking you to start a social revolution. Yeah, the easiest way during our lifetime is just, yeah, don't be a peasant. So important to mention that we are talking about the personal income tax here, right? And the country where you're a tax resident will decide how much you pay. And important to understand that it's not you who is deciding if you are a tax resident or not. Because some of the people, I will move out of Belgium and yeah, I'm not a taxpayer anymore. Or I will move out of Finland or Germany and will be not a taxpayer anymore. That's not for you to decide. The country will be the one who is deciding, and specifically the bureaucrats. And that's one of the reasons why some of countries like United States They don't even allow you to stop being a tax resident there. Even they have some exception for the people who live abroad, up to about $110,000, but they're not allowing you to stop paying or reporting your income. In European Union, it might seem that you can move out easily and stop paying tax. However, most of the European Union countries will not give you the document where they stated you are not a taxpayer anymore. Maximum they can provide you a document, you don't owe us money yet, but you will not get a document where it says, hey, you are not a tax resident. They can give you a document you don't have a registered address, but nothing about tax residency. And that's for a simple reason, guys. So now when you're starting making serious money and you're not living in the European Union country any longer, and you start receiving, let's say, 10 mil a year on your personal accounts, guess what? They will find some of the properties you own in Europe, or maybe a room in your parents' house, and they will tell, hey, you are a tourist, you are still a tax resident in our dear country, Belgium, and they will put the tax retroactively, which means, for example, for the last 5 years, you were earning 10 mil a month and you were putting it as a profit distribution to your personal accounts. Dear bureaucrats will tell, hey, now you have to pay income tax for the whole 5 years. And that's not something that's made up. I know about the cases where people who moved out of Europe got notified after more than 5 years that they have to pay the tax retroactively on their income. The government might be slow, but it has unlimited resources to get everything you own. So what to do when you have an enemy that is so big and so powerful? Well, the best thing is to be invisible, right? And if you cannot be fully invisible, then at least be faster than them. And to be faster and make better decisions, you have to also understand the current international taxation agreements and rules. In addition to that, you have to understand the local tax law, the country where you're coming from, where you've been a tax resident. By the way, this video, it's not a tax or legal advice. I'm a business coach. I help business owners to stay on track and protect their business and protect their finance. But for the local law, you have to consult with the legal attorneys in your jurisdiction, specifically on the topics like exit tax, canceling the tax residency, and minimizing the risks of the government being able to put tax on you retroactively. And what is important for European Union citizen who is moving out, or you're thinking, okay, how can I move out to live a better life in a better climate and also to pay less tax as a business owner for your profit distributions, then keep in mind the next 4 key points about tax responsibilities in European Union countries. So first of all, if you physically live there, then it doesn't matter if you have an offshore company in Panama or Hong Kong or Dubai. if you physically live there or if the tax authorities think that you live there. You will have to pay tax on your profit distribution even if you receive money on the offshore bank accounts. So if you moved out of the country, but the tax authorities still think and will decide that you're still living there, you're just traveling, then it makes you a tax resident there. The second point that they will look at is if you have any ties to your original country, let's say it will be Belgium, and if you have a mobile number or if you left a gym subscription membership, then they will think you are actually just traveling and you will come back because, well, you didn't cancel your gym membership, and for that you will be taxed on your whole income. So the third point, if you have family ties there, right? If you're regularly visiting family in your original country, then again, it can be put against you to decide if you are a tax resident or not. And the fourth point is if you have any possibilities to live there. Even you have a room in your parents' house left, or you have a property, you have a house that's just empty, then it will play against you. And when you will have enough money on your bank accounts and they will see the opportunity, they will not do it if you have even 1 mil, but the moment you will start receiving 10 million and higher annually, they will be seeing opportunity to get an extra income for the tax department, and they will use those factors against you. So my goal as a business coach to help your business and you to minimize the risks from outside that can take your finances away from you, which also includes helping to understand, okay, what's actually the moves that you can do from the business perspective and the personal perspective to keep your wealth. And here let's talk about different jurisdictions. So the good thing is that now we have multiple countries who are competing with each other. And some of them, to attract capital and people who are talented, offer more interesting options, including zero income tax or zero tax on dividends. If you want a couple examples, a country like Georgia, if structured correctly, it will be 1% on your income tax. And if we are talking about biggest Asian financial centers like Singapore and Hong Kong, when structured correctly, it can be zero tax on your income. Same goes to Panama and Dubai, UAE, some free zones. Even it's becoming less popular for known reasons. So it all regarding the personal tax residency, right? Extremely important to remember that when we are talking about the personal tax residency, right, it's not related to where your company is registered. So we are following with my clients a simple rule that gives you power, which is you keep your company offshore and you live in jurisdiction where you don't have a registered business, because the moment something happens and the government decides, oh, I want to pressure you, right, I want to put more tax on your business, well, good luck, because my businesses are not in your country, so they cannot pressure you, they cannot take your business. And that's very important to have control over your life and wealth. Because the moment you mix those two, personal residency and also where your business is registered, and you put it in one jurisdiction, you lose the flexibility, and in most cases you also lose the offshore status. So if you think that the video was helpful, please click like, right, and subscribe to my channel. As a business coach, I help my clients to make sure they have an anti-fragile business and they don't put their wealth in danger. Stay profitable, protect your investments. Your coach Glenn.